Hey everybody, welcome back to Whiteboard Finance. My name is Marko, and boy, do I have a banger of a video for you today. The trade war is back. So why is tech tanking and what is next? Let's get right into it. So I'm recording this at like 6 in the morning the next day. I wanted to wait till all this news actually settled, and then I wanted to actually get a screenshot of the market's close from yesterday. So you can see all these tech stocks selling off. You have Google, Amazon, Meta, Tesla, Apple, Nvidia. They're all down 5, 6, 7, 10%, right? And then look at this little Lone Ranger right here. AMD, baby, advanced money destroyer. So let's get right into it. So why is this even happening? So the trade war is back, and no one seems to be talking about how serious this actually is. So markets have been hanging on to this idea that April 2nd, what Trump is calling the reciprocal tariffs day, is going to actually bring some clarity to the markets and what's ahead. But here's the deal. The day might actually be the start of even more chaos. So in fact, tech stocks, which I just showed you, alone have lost $400 billion this week. Why? Because smart money is realizing that uncertainty is about to spike. So let's take a look at this. So for the last week or so, the markets were actually starting to price out tariff uncertainty. So if you look at the left side of the chart here, markets bottom as tariff headlines stall, and then you can see the Wall Street Journal reports potential leeway in tariffs. So this was March 24th. The Wall Street Journal hinted at some possible leeway on tariffs. Things were actually calming down until this morning, okay, at the time of this recording. So let's take a look at the rest of this. We have stocks pricing out tariff uncertainty right around here, okay, this was the 25th. And then look at this. The auto tariff headlines emerge. So what are those auto tariff headlines? Bloomberg drops a bomb that Trump is prepping auto tariffs, and they could hit as soon as today, okay, at the time of this recording. This isn't just noise. Remember, Trump already gave automakers a 1-month delay. That is expiring. So the S&P 500, which has already been stalling, it's sitting at right around the 5,800 level. So markets are nervous, and now we know why. So take a look at this. President Donald Trump is readying an announcement on auto levies as soon as Wednesday, according to people familiar with the matter. The people shared the timing of the expected announcement on the condition of anonymity to discuss plans not yet made public. So if we take a look at the Trump auto tariff announcement, everything starts tanking, even though U.S. markets form a lower high. I've never seen markets this volatile. I've been investing since 2006, you guys, since I was 18 years old, okay, senior in high school, freshman in college. And I've seen 07, 08, I've seen, pandemic drop, 30, 40%, but nothing on a daily basis like this. This is super volatile, you guys. So people think that April 2nd is going to end this confusion, but actually I think the opposite. So Barclays says these reciprocal tariffs could hit up to 25 countries. Think about that. So industries like autos, pharma, semiconductors, these are all in the crosshairs, okay? It's all fair game. And countries are not going to sit back and take it. They're going to respond. So that's why I'm calling this video Trade War 2.0. So take a look at this. Trump may slap reciprocal tariffs on as many as 25 countries on April 2nd, according to Barclays. Barclays analysts expect former President Trump to announce reciprocal tariffs next week on 15 to 25 countries with large trade imbalances, with the U.S. sectors likely affected include autos, huge industry, pharma, huge industry, and semiconductors, huge industry. Read The Chip War if you haven't. It's a good book. So we can see how this is affecting Nvidia. So you want proof? Here you go. Just look at Nvidia. It's down 7% in 2 days. It's no longer the most valuable publicly traded company in the world. They do over $17 billion in revenue just from China alone. So investors know that a tech cold war is coming. And it's not just stocks dropping. Foreign investors just pulled out $6 billion out of U.S. equity funds. That's the third largest withdrawal on record. Institutional buyers, they're out too. Hedge funds, they're dumping global stocks at the fastest rate in 4 years earlier this month. So take a look at this chart. Biggest foreign selling off of U.S. stocks since March of 2023. Foreign domiciled U.S. equities fund flows, weekly and 4-week moving average in billions of dollars. So if you look at the light blue, that's U.S. equities fund flows, foreign domicile in billions. You can see that right here, March 25th. And then look at the dark blue. That's the 4-week moving average. Look at this huge spike down going back to essentially zero, okay? So this is Bank of America Global Investment Strategy. All my stuff is sourced. Sources are disclosed. So if we keep going, take a look at this chart. These are global equities. This is the 2-day gross flows. Look at that red circle right here. You can see how much was taken out just over the last few days. So meanwhile, retail investors, they're buying the dip. Okay, everyone's been buying the dip, just like 2021. So Wall Street, they're not buying it. So this divergence is dangerous. You have mom and pop retail investors that are taught, they're trained to just keep buying. Stocks are on sale, right? And you should, because if you miss out on just a few key trading days, that can make a huge difference in your portfolio. So I stay invested, and I typically just dollar cost average. My philosophy has always been on this channel, the money printer is going to keep going, right? M2 money supply just goes up and to the right. What do you think is going to happen to assets? They're going to go up and to the right. Housing, stocks, precious metals, Bitcoin. As long as M2 money supply keeps growing, assets are going to go up and to the right. That's why the difference between haves and have-nots keeps getting bigger and bigger. So let's not forget, Trump has made it clear he's willing to accept short-term pain for long-term gain, okay? His cabinet agrees. And with inflation still hot, don't be surprised if Jerome Powell plays along. So let's break it down, okay? Let me conclude all this, and then I actually want to get back to the chart that I just had on the screen. I want to talk about it. So investors are mispricing risk, retail. Tariff uncertainty is rising. Foreign and institutional capital is backing out. Tech is no longer leading, and Trump is ready to weather near-term weakness. So in my opinion, this is not a great recipe. You can see all the big money, all the smart money. They're go watch all my videos from the past month. You can see all the big money, all the hedge funds. They're getting out of the Magnificent Seven. They're getting out of U.S. domestic stocks. You just go watch those videos. So let's get back to that chart real quick that I wanted to show you. So this is 100 years of equity market concentration, okay? The equity market is currently near its most concentrated level in 100 years. So if you look at the gray line, that is the weight of the top 10 stocks in the S&P 500. This is at all-time highs, you guys. Okay, this is the tech stocks. This is, literally whatever the top 10 are, which are mostly tech. It's Magnificent Seven and a few more. But if you look at every time this happens, there seems to be a recession, right? Dot-com bubble, 2000, 2009, 2020, and then look where we are again. We're at all-time highs again, you guys. So I think this is very important to study. At the end of the day, if you think that American exuberance and all that stuff and all the best talent from around the world still comes to the United States and we have the deepest capital markets in the world, then stay invested, right? Most of my net worth is in VTI. It's a total U.S. stock market fund. And I have a good chunk of change there. It's not immaterial. So I share all that stuff with you guys in Whiteboard Finance University, my buys, my sells, my trades. We have courses. We have everything. It's a great community. Go check it out if you haven't already. But if you want to see exactly how I'm navigating this volatility, check out that link down in the description below. So build your foundation, protect your portfolio, profit during this uncertainty. And as always, gently click the like button, gently click the subscribe button, gently click the bell to get notifications, share the video with 3 friends, okay? And as always, have a prosperous day. Dude, imagine how much insider trading is going on with this volatility. All you have to do is tweet something, okay? You can move markets like crazy. Hundreds of billions, trillions of dollars being moved. Go watch the S&P 500 chart. It's like a roller coaster. It's unreal. I've never seen anything like it. Peace.